All right, this is Bruce for Hola Prime, taking a look at Bitcoin, the New Zealand dollar, and the S&P 500, starting with Bitcoin. So we were talking about this level for last week as well, which is resistance around recent highs, which is the blue 200 moving average. But now what has happened is the 20 moving average purple has started to converge with the same resistance zone. That means that these two lines will be identifying essentially similar resistance, and therefore it makes it a more significant potential price level, in my opinion, and therefore the potential upside breakout could be more significant. Alternatively, the downside can be more significant as well because the resistance increases or a breakout through resistance becomes more significant. Those are kind of the two options I think that we're facing now with Bitcoin. And of course, and that high, just to give you a number, is 85,950, 960 roughly. And the 20 moving average is currently at 84,998. So we do have price compression here between this uptrend line, the 50% retracement, the downtrend line, the 200 moving average, and the 20 moving average. So it certainly looks like it's getting closer to something happening or something becoming a little more clear. But you can see if Bitcoin drops below today's low, it's still facing support down here around this trend line, and that can vary depending on when it might be reached. So we'll have to watch and see, but we have an upside level of 85,960. A breakout above that is bullish, and it needs to stay above it and keep going, of course. So there needs to be further follow through. And the top side on that initial rally might be around this 50 moving average up here that happens to converge with the trend line, making it more potentially significant because they're both identifying the same price level at 92,215. Now, generally, if a market can't go down and it keeps trying to go down and it's not going, it does have a potential to swing back the other direction. Just keep in mind that any kind of rally at this point is a rally within a larger downtrend or a counter trend rally. Moving on to the New Zealand dollar. The New Zealand dollar is kind of interesting potentially for a couple of reasons. Number one, we have this rising channel, and near the top of the channel, we're talking about the green one here, was reached on Tuesday, and we have some mild resistance. You could see that breakout above the previous day's high didn't go very far, and the close is around the same level. So we have kind of a slowing down and teetering off of momentum there. And then when we put in another channel by these two rising lines right here, you can see that we're also around there. Now, this is around, okay? So that's part of it. But the other one I think that's a little more interesting is that if we look at our 2 hour chart, or let's see, the 1 hour chart's a little clearer, you could see one, two, double top here. And the double top, it's a small one, granted, but that also helps keep risk a little tighter as well. So we have a breakdown of the double top, and then we have a swing back to test previous support as resistance. And you can see that it's already broken back above the 20 moving average, purple, on the 1 hour chart. This is a 1 hour chart again. And found resistance around the 61.8% retracement so far, but now it is turning back down. So this is classic bearish behavior, break down, pull back, and then continue to the downside if it's going to do that. And if it goes above this high right here, in my opinion, going to be less likely to do it. So this is 58.20. So that's still relatively close. It's not clearly bearish yet. A breakdown back through this level will further confirm the potential for a decline to some of these lower price areas. Moving on to the S&P 500. It's been having a tough time finding a bottom here, but that is actually better for the health of the trend because a V bottom is less sustainable. It also provides additional opportunities to position yourself to take advantage of the potential for a follow through to the initial leg up. So we got a leg up. Let me just put this to the right. We got a leg up. We got a pullback. So let me just go into the hourly chart to take a closer look at that pullback because that pullback came out of a double bottom. So we broke out of a double bottom. It's not perfect because it's a little lower, but still, it broke out of a double bottom, pulled back to test support, and we seem to be finding support just about right around the 50% level, it looks like. Yeah, right at the 50% zone. So this is an area where it could turn back up and continue on its way, or it makes another drop to lower prices and then reverses. Of course, a drop below the low changes all that, 5,505. But also keep in mind that there could be an undercut and rally scenario as well, where all the stocks get taken out at the bottom, and then buying pressure starts to take over again. So keep that in mind. So right now on the daily, this doesn't tell us much other than it looks like it might want to go a little bit lower first before it's going higher, if that's what's going to happen. Of course, the 200 moving average and the 38% retracement are the key initial resistance zones from 5,703 to 5,000. I'm sorry, 5,743 to 5,750. All right, that is it for today. Have a great week.